Hey everyone, it is Evan here from the Trade Risk on Tuesday, November 27th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our market technicals dashboard first. We're going to take a look here at the major averages. You can see we did have a mostly green day today. It was only the Russell 2000, the small caps, that did not perform. We closed down minus 0.85%, but you can see the rest of the market had a good Tuesday here, and those were following up the gains started from yesterday. You can see the 5-day change now, not in deep red territory. In fact, we got the Qs now in positive for the 5-day change, so some short-term stabilization there. We're going to talk about that when we look at the charts. Longer term, we are still below all of the key moving averages here across all of the major averages, and we are in between last week's range as it stands right now. If we scroll down a little bit further, we can see sector performance. We got more risky components of the market now. Semiconductors, biotech leading the 5-day performance to the upside. On the downside, we got materials and energy staples on the bottom three. When we look across some of the major markets now, we got the US dollar, which is up at the top. We got China, emerging markets trying to eke out into positive territory, and then we have some of the commodities here: oil, natural gas, and volatility starting to unwind a little bit. So all in all, a slight improvement here for the bull case over the past two sessions. So let's jump into the charts now. Let's take a look here at the weekly time frame of the S&P 500. You can see we have an inside week brewing so far, still well within last week's range and still kind of contained in the bottom 50% of last week's trading. We fell almost 4% last week, so we have plenty of road to recover on the upside. But as it stands right now, inside week brewing, still have a MACD that is heading lower, making new lows here on the weekly time frame. We're still below this key trend line that we broke several weeks ago, a couple months ago, below 26, call it 2870 or so, where this trend line extends from the 2016 lows, and more or less we are still moving sideways in this much larger term range. When we go down to the daily chart now, we'll switch over to more of the short-term levels that we're looking at here. For the S&P 500, you can see that over the past 4 days now, we have stopped the bleeding. We have started to move sideways and in fact lift higher. There was a gap here from last Tuesday. We're trying to get that filled now. We're in the process of working our way higher to fill this gap in here. Note, we still do have that positive divergence in the MACD on the daily chart, not on the weekly chart. The weekly chart still looks pessimistic. On the daily chart, we do have this positive divergence going here as we retest the October-November lows here. We do have, again, that slightly higher low in the MACD, and we do see some stabilization. So it is possible, well, I guess the way we should frame it is, if you are bullish here, if you want the bulls to succeed, you want to see this as a sort of double bottom, a retest, if you will, positive MACD, and you want to see buyers step in exactly where they are stepping in right now. If we were to lose these lows here, call it 2630, and then of course you have the intraday low back on the 29th of October down around 2603, that's going to be your risk to downside. That's going to be your zone of support if you're trading and thinking in terms of stop losses or just general guideposts of where risk opens up. That is where you're going to want to see this market hold above. You're going to want to continue to see support come in here and buyers start to step in around these levels. If we do see that, if we can fill this gap, if we can start to get above 2700, then suddenly, we could get a nice pop back into this range, but it's one step at a time. I think the good start, if we go to the SPY, for instance, the good start here is that Tuesday, today's session, we did manage to hold yesterday's gains. So we had those nice gains yesterday. We were up 1.61% in the S&P 500. Today was a good day to determine if that was just kind of a quick one-day short covering type of squeeze higher before a drop. That proving not to be the case so far. We did, again, hold those gains here on Tuesday. So we'll see if we can get this gap filled, and if for the rest of this week we can continue to hold above these recent levels here. That would be some good signs by the bulls, all things considered. Again, don't think we're out of the woods. Don't really does come down to time frame here and how active and how micro you want to look at this market, but it is some good signs here, at least in the very short term, that we do have some stabilization. Levels I would pay attention to: 263 to the downside. If we start taking out Friday's lows, that's where the tune definitely changes and the sellers back in control across this shorter term time frame. Go to the IWM. You can see this was weak today. Maybe this is the canary here, saying that this market is not for real, but this was down minus 0.83% and pretty much closed the day at the lows here. It wasn't a big intraday range, but you can see we did manage to close below yesterday's lows Monday, so that indicating that, you know what, this rally that we saw Monday maybe isn't for real here in the small caps. We are still in kind of a messy area here, so if we start losing this 146, 145 area, that's going to spell trouble for this market, and I would assume the market more broadly speaking, so keep an eye on that. Let's pay attention to see if the Russell is just shaking off a one-day sort of weakness here, or if this continues lower tomorrow, then that is certainly likely to put pressure across some of those other major averages. Then we have the Nasdaq 100, which is now managing to reclaim the lows here back from the end of October. We're lifting higher. We're up 34 basis points today. We're up 2.31% yesterday. So if we can start to move higher here above this 165 area, hold above this 160, that is some near-term constructive action, but still on the bulls right now to prove their case. Finally, we get the volatility, which is coming off a bit. That is VIX. VIX is now trading around under 20, so 1886, starting to pull off of these high levels north of 20. That is, again, constructive to see. I haven't looked at the curve. Not sure if we're still in backwardation there, but good to see a little bit of that fear coming out of the market as we start to stabilize. So that, I think, covers all the majors that I wanted to mention. Let's go through some of the other major markets here. We'll go to TLT next, which on the week is pretty much flat. We go back down to that daily chart. We're right bumping up against the October highs here around this 115 level. We saw a little bit of a stumble last week on Friday, and then we're kind of just grinding right along this 115 area. So this is a short-term trend line that's extended from the lows here made at the start of this rally back on the 2nd of November. We're starting to flirt with that right now. If we were to break down below it, then I'm sure we're going to get some shorts looking in to catch this rising rate train to the upside once again. So keep an eye on this 115 area. I think this is going to be good small battleground here to pay attention to. Ultimately, we still have a range here that I'd be looking at between, call it 112 and 115. Next up, if we go to oil, oil's still in a world of hurt here. It really hasn't caught its footings. It's trying to right now. I mean, it's making attempts here over the past 3 days. We haven't really made new lows. We tried making new lows today. That reversed. We closed near the highs of the session. Still lots of volume coming in here, so it does, it is indicative of lots of turn in here, lots of supply trading hands. So it's possible that now, after a 30% straight line shot to the downside, 34% in oil, we could get a little reprieve, a little bounce here. I would not be surprised. Maybe this is the start of it. You can see the MACD trying to flatten out here. So if you're aggressive, if you're active, this is a spot to pay attention to. Got a good kind of reversal single day here. Let's see if we can add to those gains, see if we get that follow through to the upside, break this downtrend line. Those would be the starts of at least some type of bounce higher. Natural gas also coming off this week. You can see this started off the week 5% to the downside yesterday. Did add to those losses a little bit today. It's down 6% so far. We took out last week's lows. We've had a position in this for the past couple of weeks, catching this run up in fortunate spot, but we did sell out of the remaining of our shares of UNG yesterday on Monday. With this gap down, it was just enough for us to break through that trailing stop and to step aside. could still hold on here, right? It had a pretty historic move here to the upside, so maybe just more sideways over the next couple of weeks above, you know, $30, $32 and below $40, carving out some type of range. Maybe if that's a sustainable consolidation, that will lead to a second leg higher, but for now, we're going to let this just kind of simmer off here. Still a good amount of volume coming in as it's trading around this $34 area. Bulls still in control, but a little bit of a loss there with this gap down and hold from Monday. If we go to metals next, you can see GLD starting to roll over just a little bit. It's down 71 basis points this week, 115. This was the horizontal level that we've been paying attention to. It is below that level right now, or at least flirting with it, so we do want to be a little bit cautious here. It's still well within the noise of this recent range that has been moving sideways, mostly sideways, over the past couple of months. Maybe you have a bigger bear flag here. If we look at the weekly chart, maybe this turns into some type of channel that ends up breaking down. That would be a really nasty second leg down here for GLD on a structural basis. Don't necessarily see, we don't see that happening just yet, but it is something to keep in mind. If we start breaking down through here on heavy volume, getting continuation to the downside, then, certainly look out below. Silver, kind of the similar situation. Structure here is a little more flat. It's mostly just a sideways channel, $13.10 to $14, pretty much $1 playground for silver. It's heading back towards these lows. Want to see them hold if you're bullish here in silver. $13 did just hold a few weeks ago, back on the 13th. Retesting that again in very short order may not be the most ideal situation, but we'll see if it can hold if we do see silver get back down there. So that is it. That's what I got for the midweek recap. A little bit of movement, a little bit of positive action coming out of stocks for the first time in a little while. Let's see if that can hold. Let's see if we can get into the end of the week with a positive close here. That would be some good signs that the market is finding some buyers around these levels heading into seasonally a pretty constructive bullish month of December. So that is it. Thanks so much for watching. If you like the videos every Tuesday and Friday, you can subscribe on our YouTube channel. Thanks so much, and talk to you on Friday.